3, 2, 1, 0, all engine running. Liftoff. We have a liftoff.
Only.
Hello and welcome to Up Only TV, where we're down bad, but we're not out. We're here today with some expert guests. One expert guest. John Bollinger is going to be here with us to teach us, to show us the ways of Bollinger Bands. I cannot wait. Seriously, I'm so excited. First, let's talk about Blockfolio. They are our partner for this show. Go to uponly.tv/Blockfolio. You can make a trade there today. If you hadn't done it already, you can choose to buy the dip. You can add fiat from your bank directly in Blockfolio. There's zero trading fees when you use Blockfolio. Go to uponly.tv/Blockfolio. Thanks so much to Blockfolio for being our partner. Let's get to it. Cobie, hello.
How do you feel? It feels like we're in presence of greatness. Don't you feel it, Ledger? Do you feel it, Brian?
It's because we are. We're
in the presence of greatness. I feel like I'm becoming happier and healthier and smarter by the minute just sitting on this Zoom call with John Bollinger, the inventor of both Bollinger Bands and Bollinger Champagne. I'm just reaching new heights. Mate, welcome to the stream. How are you doing?
Really well. I'm actually very, very distantly related to Bollinger Champagne. So.
Wow.
Yeah.
Wait, really? I was just making it up.
like 8 generations back or something.
I love it.
Do you get free champagne?
Nope.
No, scammed. You got scammed.
The opposite. When a Bollinger shows up at the the vineyard, they say go away because they think we're all showing up to stake a claim to the property.
You're not welcome amongst the champagne Bollingers. Yeah. But welcome, mate. Thank you so much for coming on. I know we hassled you a great deal to get you to go onto the show. Used several aliases to ask you to come on over and over again. And in the chat, people are shouting your name. They're spamming Bollinger's here.
He's going to save us.
Yeah, welcome to the show. So where do we even start? It's actual John Bollinger. Ledger, where do we go from here? I don't know what to do. I'm not a proper interviewer.
Yeah, so I gave him a little bit of a preview ahead of time just to warn him that I've known about Bollinger Bands and much later John Bollinger himself for over 20 years now, which is insane. So like my very first trades, my dad gave me a little bit of money and he showed me how to do markets, and one of our trade triggers that we came up with in this little system was to see, is volatility coming soon, basically looking for Bollinger Band squeezes, which I guess is the first thing you can do, like when you're learning Bollinger Bands, you just want to find out, are they tight or not. But that's what my dad showed me back in the very early 2000s. And so it's a pleasure. It's like literally like one of the people in finance that one of the first names I heard was John Bollinger. So it's really a pleasure to have you here.
There you go. It's my pleasure to be here. Thank you so much for having me on. So
I think you've been a trader for a long time, but at some point you were like, I'm going to develop these tools based on some back testing, or what did you do? Like, how did Bollinger Bands come to be? And when in your career did you come up with them?
I was, I was actually an option trader, and I had a lot of interest in volatility. So that's where the volatility piece came from, because if you're going to trade options, the first thing you have to do is get a handle on volatility, both historical volatility and estimated future volatility. And at the time, we were using a really great trading system. It used moving average, a 21-day moving average, and we shifted up and down by 4.5%. And we coupled that with a couple of oscillators, one based on advances and declines, and one based on up and down volume. And we got to the top of the channel, and one of those oscillators was negative. We'd take that as a sell alert. We got down to the bottom of the channel, one of those oscillators was positive. We'd take that as a buy alert. But it was very frustrating because we were doing things by hand back in those days. And you constantly had to change the width of the bands depending on what you were looking at, or even worse, as time passed, and the volatility cycle changed, you're constantly having to change the width of the bands. The problem with that is not what you might think, just the effort, but the problem is when you're constantly changing the variables that you're working with. If you're bullish, you set up the picture to be bullish, and if you're bearish, you set up the picture to be bearish. So you're letting emotions seep into the process, which always undermines trading. Very, very hard. So what I was looking to do was find some way to automate the setting of the width of the band so that I didn't have to do that. So I could take my emotions back out of the trading process. Coupled the work I was doing in options volatility with the work I was doing in technical analysis, and the result was Bollinger Bands.
So when you say you had to do stuff by hand,
really by hand.
What did that look like? What do you mean? What do you mean by hand? Because I guess TradingView wasn't around.
Yeah. So I started when I decided to make a career of trading and stuff. I looked around for people to learn from. In those days, there's no internet, so there's no communicating with people easily in the way we can today. And all that tutorial material that's available now on the internet just wasn't available. So, in those days, if you were an active trader, a brokerage firm would give you a desk in their office. They'd have like a bullpen out in the center of the office with 20, 40 desks, something like that. And so I got one of those, and I was trying to learn how to trade and trying to pick the brains of the older brokers around me. And I found a guy who had just started a small boutique brokerage firm, and I went and apprenticed to him for a year. And I kept his charts for him by hand for free for a year, So that's how I learned the trade. And literally, we had graph paper, big pieces of graph paper. Here, watch this.
Awesome. Here we go.
Like that.
Epic.
Oh my god! Wait! Is this like a relic, or is this like you still do it this way?
No, this is a relic. This is from. Looks like it's from '84.
Oh my god!
There you go.
Wait, did you win this trade or not?
This was what is this? I just grabbed the piece of paper off the top of the stack. It actually doesn't say.
So this is incredible. So you would basically construct these charts based on like the price, like a price history feed or something.
Yeah. We had a Quotron machine which showed us quotes, and so we kept the charts in real time on a piece of paper, and then we kept some columnar pads like the accountants used to use, and we put prices down the side, and we calculate just a couple of indicators because it was too much work to do otherwise. We had the calculations programmed in a little HP calculator, and that's the way it was. And we wrote paper tickets out by hand when we wanted to make a trade. We had a special Western Union phone line that you'd pick up, and it would ring in the pit, in the S&P pit. And somebody would pick it up there, and you'd give them your order, and they tell you your fill right then and there. So it was,
wow. And then here I am trading dog coins in my underwear in bed after not managing to get up after midday.
Yeah. Big improvement,
I don't know which way it is. And how do you see like things have changed? Because you're clearly still interested in trading. You've remained passionate about the craft and about technical analysis. What are like the major changes for you? And do you think things have got easier? Do you think they've got harder, or is it all just the same thing?
I don't think it's gotten easier or harder. Trading is hard. It's it is what it is. To do it well, you have to be disciplined and work at it. That's never going to change. Obviously, lots of things have improved. Data availability used to be very, very hard to get your hands on data. Now data is easy to get your hands on. Calculations, if you want to do something beyond a very simple calculation, you just didn't do it. It was too much effort. Yeah, I mean you could, but it was just too much effort. So now the most complex calculation you can think of bang, computer does it for you. So things have improved tremendously. But the basic idea is the supply demand characteristics of the market, the emotions of traders and the making of markets and fear and greed. These things haven't changed at all. So
what have you changed about your process? What have you changed about your process over the years, as I assume as both technology changed and just the nature of markets changed?
I can do more now than I was able to do before. That's really I can track more stocks, and I can get more done in a day. I think that's really the bottom line. Is it's just easier to do it, period, in every way. I mean, things like TradingView, I mean, just simply amazing. I was one of the first users of TradeStation. It was called System Writer back then. And, they brought it out, came on a giant stack of disks, big floppies. I think there were 12 of them or so. You had to feed them in the machine one at a time. But, oh, my God, you could write a trading system and it would test it against historical data. It's like somebody turned the lights on in the room. So I think, in some ways I reminisce about the old days because there was lots good about them, but I wouldn't want to go back there.
Yeah, I can understand that. And, over the last sort of year, I guess since the pandemic began, there seems to have been this like phenomenal rise of traders. And you said the data availability and, access of these platforms and stuff has increased, which makes sense. It makes it easier for someone to become a trader for the first time, or like an at-home trader or a hobbyist trader. But what other sort of things have you noticed with the rise of sort of everyone becoming a trader? Was it like, I imagine back then it was very different, and like a trader was something that you sort of selected to be and not so much did as a hobby on the evening between your other job.
That's correct. It was really for an amateur trader, say a normal working stiff with a family and such. Trading was pretty much limited to getting a weekly journal like Barron's or something like that, and reading some articles, looking some data in various tables and such like that. Maybe getting the S&P stock guide was a easy and very quick way of getting some fundamental data. So that's what people did who were interested in trading, and it was it was a lot of work, and not many people did it. So I think that especially recently we've seen a huge explosion in trading, and I think the death of commissions was really a very important part of that, when they took commissions down to zero, even though the trading costs are still embedded in the prices that you get. People don't really realize that, but the old, when I started out, it was $75 round turn for a futures contract.
Wow.
It was you pay $25, $35 each way on an options ticket. So I think really Robinhood, when it came out and said, okay, zero commissions, and forced everybody else to follow it along, really enabled a whole new group of people to come into the business and take advantage of it. And I think they're doing it again. I think they're doing it to crypto right now. They just announced that they're bringing a new crypto platform, going to have zero costs with it. I think that the companies that are charging, relatively high commission rates are going to find themselves disintermediated pretty fast here.
That amazed me about Coinbase, is because they started to where, at least if you were not the taker, if you were a maker, you could trade for free, and they got a ton of volume, and then they turned fees on at a time where you would think would be when they would want to go the opposite direction and like further get people engaged to trade on the platform. What are your thoughts about fees within crypto in particular? Like, have you found it a welcoming space to trade from an infrastructure standpoint, or did it take a lot of challenges? Were there a lot of challenges kind of getting onboarded and getting used to the systems?
Well, from a people perspective, it was very welcoming. We'll talk a little bit later about that, but from a technical perspective, it's actually pretty hard for me to get going because I wasn't a miner. I didn't know any miners or anything like that. So I kind of had to flop around. I got involved relatively early, so U.S. people weren't so welcome and.
That's same everywhere, mate. Don't worry about it.
Certainly, if you wanted to trade any advanced products, right? Like, so I guess you primarily were looking at like spot only, but there weren't a lot of avenues, especially for Americans, to seek options or futures or other types of products.
Well, and I wanted to trade volatility, as you might imagine. So I wanted complex orders and such like that. And those were very slow in coming. They're available now, obviously, but simple order like one cancels another OCO wasn't pretty hard to come by in the early days.
Yeah, I think Bitfinex were maybe the first people to do that. I remember in like 2013 or 2014 or something, they added it. One thing that I found interesting with you yourself and crypto was that a lot of people I knew in crypto were using B bands already before I knew that you were on Twitter, before I knew that you were into crypto, before a lot of people knew. And when I think people discovered that you were on Twitter and talking about crypto yourself, they were kind of shocked that, wait, we've been using this guy's like fucking creation this whole time. It works really, really well for crypto, and he's like just chilling with us and chatting with us. Did you find it strange that it was so well adopted in crypto, and that it seems to work so well in the crypto markets?
I didn't find it strange, but I should start with a little anecdote. First of all, I think the fact that I'm here proves that I'm not dead. I think many people suspected that I must have been long past if these indicators were so widely adopted. But many years ago, I was walking down the aisle in a grocery store with my daughter, who was, I don't know, maybe 4 or 5, something like that. And the guy walks up to me and says, "You're John Bollinger." And I go, "Yeah." He says, "Wow, you're not dead." And my daughter looks up and goes, "Daddy, dead?"
Oh my God. I bet that was Gainsey.
That sounds like a crypto person thing to do.
Yeah.
Anyway, the point is that they've been really widely adopted. Now, I wasn't that surprised because one of the first areas outside of the stock market, which is the area I primarily work in, to adopt Bollinger Bands was Forex, right? And so the transition between Forex and crypto, seemed very easy. A lot of people who trade crypto trade Forex. A lot of Forex traders trade crypto, so on and so forth. So I wasn't so much surprised to see how wide the adoption was. What I was really surprised is how well, not just Bollinger Bands, but most of the technical tools worked in crypto. And that got me hooked, and I was really interested after that.
One more question on the history of B bands and their adoption is, how did you first get them on platforms? Like, was it self-uploading a tool into like a charting software for Forex, or was it how did you get the word out that B bands were a thing that people could use?
There you go.
There you go.
So that's a company that's long ago gone. They were a really brilliant analytical company for technical traders. They had some big mainframes in New York that did all the analytics on them, and you leased a phone line between their mainframe and your workstation, and all the analytics popped up on them. I was an early adopter of the platform, and I got to know the guys who formed it really well. And they saw my work and asked if they could put it on the platform. So that was the first appearance of Bollinger Bands on a platform.
That's awesome.
And, it was just happenstance. I just happened to really like the people from Trade Center. They were doing a fantastic job. They were, back in the day, perhaps you've heard of tick volume. It's not used that much anymore, but back in the day, it was really a super powerful tool. And they gave you tick volume in real time. It was really impressive tool, and I had a good relationship with them, so it wasn't that hard. Then on the regular platforms, the first people to adopt it were a company called CompuTrack. Again, it's another company that's gone by the wayside, but they were very, very popular with futures traders, and N-squared computing was very popular with stock traders, and both of them adopted it. So it just started catching. I should tell you, you probably don't know, I was from 1984 to 1990, I was an on-air television technical analyst.
What?
I was the chief market technician for the Financial News Network. It was the predecessor to CNBC. In fact, when CNBC bought FNN, I quit and went out and opened my own firm.
Wow. That's incredible. Wait, so it was like the weather, except it was you with like a chart.
Yeah, exactly.
And you were like, we've got a hot front, and the Bollinger Bands are getting very tight. And then there were women at home watching, like, I don't understand this section, but this man, he is tasty.
This technical analyst over here.
I watch it every time.
The bands got named on air. I showed a chart one day with another person who worked at FNN, Bill Griffith. He went on to work at CNBC for a long time. And I was pointing out the upper band and lower band. He said, "What do you call those?" And I went, I guess they're Bollinger Bands.
Did you ever have any other names lined up? Any other options? No other options? It was just Bollinger Bands from the start?
Yeah. Well, they had no name for a long time. And then, Bill asked me what they were called. And after that, it was Bollinger Bands.
Yeah.
It is a very good name. It's a very catchy name. And shortening to B bands as well, it's like, it's very, very good.
Thank you.
I want to ask. I didn't realize that you were on television. That's I already wanted to ask this question, but it adds another, I guess, layer of depth to it. Do you get a lot of people sort of coming up to you or messaging you or contacting you somehow and being like, "Bro, you've made me a lot of money"? What they mean is like, I've used your indicator, I've used B bands, or maybe you copy traded you when you were on the television, but I've used your indicator and it's like become a core part of my workflow, and I've become profitable. Thank you. Does this happen to you often?
I do get a fair amount of that, and it's incredibly rewarding.
Awesome.
I mean, one of the things that I really love is people come up to me and they'll show me how they're using my work. And, it's just an endless variety, and people can be incredibly creative and incredibly, they'll do variations on the bands. They'll do, bands within bands, triple bands, all sorts of things, and it's always a joy. I remember years ago, I was at a conference in Hong Kong, and a guy from mainland China came over to me and said, I've been using your Bollinger Bands on equity lines as an asset allocation tool. And I went, really? And that became a central part. That became a central part of my practice. So I'm incredibly thankful for the feedback that I've gotten from the people that use these tools.
That's awesome.
And
somebody in the chat just said you changed their life. Built Tonka Tough said that. So You got
there you go.
plenty of fans in the chat as well. It's awesome.
Someone called Bazam says, they're in a pandemic, we're in a Bollinger Bandemic. That's amazing.
I can see when we get back to Twitter afterwards, the memes will be coming long and hard.
Yeah.
I think it's possible. Have you seen people extend on your work in like novel ways and, create sort of offshoots of B bands? So like, maybe I did a little alteration and I could call them Cobie's B bands or something. Have you seen many of those that you think are like useful adaptations or?
Here you go. There's one published in this month's Technical Analysis of Stocks and Commodities.
Oh, there you go.
The variation on Bollinger Bands by a guy by the name of Vitaly Aparin. There you go.
Moving average bands.
Just came in 2 days ago.
That's
cool. So cool.
People are constantly doing stuff, and I think it's the greatest possible compliment, right? And I'm thrilled to see people take my work and make it their own, and develop and build out the ecosystem.
I'd like to get back to your thoughts about crypto and TA, because I remember you talking about this 2017 or so, whenever I first found that you were trading crypto, and you talked about how the TA seemed to be just really clean relative to what I guess you talked about as a transition that you saw occurring over the years in equities, to where some stuff just didn't like to play out the same as it once did, and crypto still kind of obeyed these classical technical analysis tools. Tell us about, one, what makes that easier or better for you to trade, and then two, how have you seen crypto TA change over the last several years? Has it become more like equities, or is it still very very clean in your mind?
No, not yet. So it's quite interesting, actually. I started trading equities before there were many derivatives around, so there were no stock index futures yet, such like that. So in those days, the process was much cleaner, much easier to do. And then we started to get index futures, and then index options, and then ETFs, and on and on and on ad infinitum, until you have all these secondary products. And all those secondary products create vast array of transactions that aren't directly related to supply and demand. They're related to rebalancing portfolios and such like that. And those transactions are just noise. They're just plain and simple noise. And the greater the volume of that, the more you see. I've spoken a number of times to the International Federation of Technical Analysts. They call themselves IFTA. And you go around the world and you talk to people, and everybody wants to trade the big markets, the U.S. market. They want to trade the E-minis or something like that. And you say, but wait a second, you don't understand. Your market, the one right here, it's fantastic, right? All this technical analysis and stuff like that works much better here than it does on those big markets. So people are always surprised to hear that, but I've gotten a lot of feedback over the years. People will take that and they'll find that they're more profitable in their own market than it would be in a big developed market like Germany or the U.S. I remember back in I learned this lesson in 1990, and I was at an IFTA conference in Rome, and a guy came up and showed me work he's doing on the MIB, the Bourse in Milan, and he had trading stats that were just fantastic, and I went, why is this? And he looked at me and he said, well, it's a small market. It's just started up. It's a developing market, and there's not a lot of noise in it. I went, wow, that's a fantastic observation. Because that's exactly the truth. I think crypto's still that way. There are, of course, now some institutions in crypto, and you're starting to get derivatives and related trades, and the noise is starting to pick up. But it's still better than any other market that I can think of. So.
Well, for a while, you gave me a bunch of hope because you said, people didn't trade these big markets; they went to the smaller ones, and they were more profitable. And I was thinking, great, that's all I've got to do is I've got to find a better market, and I'll be more profitable. But then you said crypto's the best, and I was like, well, if I can't make it here, I can't make it anywhere.
This is supposed to be as easy as it gets, Cobie.
Yeah. I think
isn't that a line from that song? New York, New York. If I can't make it here, you can't make it anywhere.
Maybe.
The chat is struggling now. They're like, "Oh no, what are we gonna do?"
I think crypto has got much more difficult as time's gone on. In that 2012, 2013. It was super. It felt really easy. It felt everything felt very inefficient, and everything played out exactly where you would expect it to. And in 2021, it feels a lot more machine-like and difficult to predict, and it feels like everyone's out to get each other a lot more. So I do think it's going that way.
I don't dispute that at all. I think that's probably right on, but it's still better than any other market, right?
Oh God. Oh, if a bear market comes, what are we going to do for money? I'm going to have to go back to busking on the street. I'll sing that New York, New York song for money.
I've already been doing my research. The chat was like, Ledger's got a big gulp. I went to Arby's to apply for a job already after dump this morning. They said I wasn't qualified. They're like, what have you been doing the last 2 years? You don't have anything on your resume.
Do you tell them you're a Twitch podcaster?
Yeah,
you're a Twitch streaming podcaster.
They didn't seem to be impressed.
That's hilarious. So, John, over your years as a trader, you've seen these markets develop. You've seen things mature and get more difficult. You've seen new markets emerge and stuff. How what have been your the glory markets, like your bread and butter, like these markets you could just, I wish I could trade that all the time. That was perfect. Everything did what I thought it was gonna do. It was the best trading experience of my life, or it was the those years where you just can't get it wrong.
I don't know about the years where I can't get it wrong. That's
I have the opposite. Years where I can't get it right.
Yeah, a little bit of biking. I grew up as a equity trader, trading, U.S. stocks, and for me, that's still the name of the game. I love trading stocks. My company here, Bollinger Capital, is a RIA, registered investment advisor, and these days almost all registered investment advisors trade ETFs instead of stocks. So we have a whole niche for us to, here to offer people. We have very little interest in ETFs. Sometimes we use them to hedge or pick up some exposure or something like that. But trading stocks for me is still the name of the game. It's, you get a really great stock trade. You do it well. You pick up something early in its cycle. It's really strong. You add to it on the pullbacks. You trim it a little here. You play with it over time, and it really racks up incredible gains. For me, that's the peak trading experience.
How do you do your process? Do you have fundamental drivers that y'all filter by in terms of what you want to trade, or is it purely technical, or is there a blend?
So years and years ago, I coined this term rational analysis. It's the juncture of technical and fundamental analysis. I guess these days you have to say it's the juncture of quantitative, technical, behavioral, and fundamental analysis. They've whacked these things up into different pieces. I don't. That doesn't impress me so much. But we start, with a macro view of what's happening in the market as a whole. And we work down from there. We go from there to sectors, and from there to industry groups, and from there to stocks. And, I give you an example. If you want to peek over my shoulder one day, every weekend I put together a little chart pack. There are, I think, 40 charts in it now. And I put it up on my website. You can download it for free and take a look. It's at bollingerbands.com. Down, if you page all the way down to the bottom of the of the homepage there, usually Saturday afternoon sometime, I will pop up that week's chart pack. You can download it and take a look at it. It's a macro view of the U.S. and world markets, and that's where we start, right? That analysis is our key piece of analysis. But looking at that and some other factors, we can figure out, if we're bullish or bearish, and we start from there. Yeah, there's my chart pack. There you go.
Awesome. So are you telling me every week you put out 40 charts for free on this? Yeah. Man, paid groups are in disbelief. The paid groups don't lead people to this. They're going to take all the customers.
As I've said many times on Twitter, if they're asking you for money, it's not me.
Wow, that's incredible. That is every week. My God, this is.
Well, it's part of my process. It's what I do every week. It's the way I keep track of the market. So it's really easy. I just, after I create it, I just post it.
There we go.
So I came from the early days of the internet, and that's what you were supposed to do. You were supposed to share. It was supposed to be an open kind of, interactive sharing process. And that's how I got involved in crypto. In the early days of the internet, I built a number of websites, analytical websites, and in order to serve really well, you had to be near one of 7 nodes in America, and there was one in Seattle. So I knew 2 guys up there, and they started up a little ISP, an internet service provider. They built a bunch of servers and stuck them under this stairwell of their home, and they got a dedicated phone line and linked it out to that node, and they tended my servers for me. Well, after a while, the operation got a little bit too big for their home, so they needed to move it to someplace where you could have servers. And at the time, they took a Westin hotel in downtown Seattle and converted it into a server farm. The whole hotel. It's called the Westin Building. It's still full of servers to this day. But so they moved all my servers along with theirs and everybody else's servers to this hotel. And about a month later, I showed up because I wanted to see, what this was. And you walk into this room, right? And they have these air conditioning units blowing, and it's polar. I don't know what temperature it was, but it was probably in the 40s or something like that. And it's hugely windy and it's tremendously loud. And so I go over and I see my servers, and everything's in order, and they've done a really nice job, and I congratulate them on all that. And I look at the next rack, not my rack, but the rack next to it, and in it were 2 early Bitcoin mining machines, big suckers. I think they were 12 units high, and they were loud. They were roaring away, right, with all the fans and stuff that were needed to cool the chips. And I said, "What are those?" And they said, "We're mining cryptocurrency. We're mining Bitcoin." And I went, "What's that?"
That's amazing.
And that was the beginning of my interest in Bitcoin. I went, "You mean you're printing money here? You're actually printing money?"
Oh wow! So what year will this have been?
Oh God, when did they move to the Westin building?
A while back.
I don't know, early 2000s?
Maybe late 2000s.
Like early 2010s, something like that. So it was early.
Yeah, somewhere's in there. I mean,
if it was if it was a large ASIC, then it had to be or if it wasn't even an ASIC, it was just like a specialized computer.
Could be a GPU rig, with in a box.
Yeah, a long time ago. So you've known about crypto for a long time.
Yeah, but I didn't follow up on it until later when it started gaining a little bit more traction, and I realized it was actually tradable, and that's when I got interested.
Yeah. Why do you think that these assets trade cleaner when they're smaller? Is it I've always used a phrase, and maybe you can just spot check me whether I'm spouting nonsense or not. Go ahead.
Oh, no, I'm sorry. I just got the delivery. Do you need anything? No, you're good. All right. Take care. Thank you.
Awesome. So
disk drives for a server.
When I talk to people and try to explain TA a little bit, I'll often just say it's psychology visualized is what you end up seeing when you're looking at a chart.
That's a good explanation.
What do you think that's why these less efficient markets, where fewer, if you're getting more of kind of this raw emotion that's printing on the chart and less of the automated strategies or whatever else that people could be running programmatically or otherwise? What do you think plays into it in terms of what makes them more efficient from a classical TA perspective?
I think all the automated strategies, all the arbitrage, all the index arbitrage and all that serves really only to introduce noise into the markets and make it harder to see the signal. And that in these less developed markets, even some which are quite liquid, I must say, it doesn't mean that they're small markets, but they're just lower down on the development curve. Even in those markets, the exact same things are on display, the same interrelation of accumulation and distribution, the same relationships of supply and demand, the same vectors of fear and greed. They're just not as hidden as much by all the noise that's being generated by basically ancillary operations in the larger markets. So, a description of TA is, as depicting, emotions on paper. I think that's actually a pretty good description. I tend to talk about things like supply and demand and accumulation and distribution and such like that, because those were the terms that I learned when I was in the beginning of my process. So that's the way I think about it. But
that's cool. Cobie, what do you have before I start digging into technical stuff?
I've seen on Twitter that people are looking up, trying to find clips from this technical analysis TV show that you hosted. They're trying to find some old episodes of videos. I also would like to see them.
They're around. There's a really, really, really funny blooper reel that was made at the end of FNN that circulates around the internet from time to time. It's got a clip of myself and an anchor called Sue Herrera, and we were sitting down in chairs facing one another with a little coffee table between us, and she was going to interview me about what was going on in the markets. And there's a little process. You got a stage manager who gives you hand signals and such like that, so you know what's going on. And so I just, as we were coming up to the segment, I looked at her and I made this little funny noise, like a boop boop sort of noise, and it went out on the air. Right? And we just looked at one another and we started laughing, and we couldn't stop. It went on for like ever. I mean, it was just we laughing to the point where we were doubled over, tears running down our face.
On live TV.
On live TV, because that's all I ever did was live TV. There was no. I had when I was a kid, I had a problem with my eyesight. My eyes weren't well coordinated, and to this day, I can't read prompter to save my life. I long ago solved the coordination problem through visual therapy, through these exercises and such like that. So I have, relatively good vision now, but I cannot read teleprompter. So all I ever did was live TV.
That's awesome.
Oh, wow. So, chat, if you're in the chat, you've got to find this blooper reel for us. We need to see it. Someone else in the chat also said, can you ask Cobie Bands when I'm getting the IPA he promised me on Twitter?
All you have to do is show up here. I'm in SoCal. I'm happy to buy.
And, another question was, does Bollinger Capital take interns?
CMS interns looking for a change.
We do from time to time, and a basic test is if you can figure out how to reach me.
There you go.
It is quite interesting because you said for a year you did, you did charts for this this trader for free, and you were like trying to learn from them. Has that ever happened in reverse? Like, have you ever taken anyone under your wing? Have they released their own indicator later, gone on to global trading fame as well?
I have. Maybe the best example is a technician that works here in Southern California by the name of Frank Barbera, who worked with me for a couple of years and went on to have a very stellar career.
Frank Barbera. So, all right, is there some Barbera bands anywhere? We need to look up Barbera bands.
His specialty is in gold stocks. He like many technicians today, many technicians will latch on to a thing, like I don't know, become a futures technician or become an interest rate technician or something like that. So he's always called himself GST, the gold stock technician. And he just from the beginning, he had a real interest in gold stocks, and he just learned it inside and out. Nobody knows the gold market better than he does now.
That's super interesting because I've found that as well. People like stick to a market that they know really well, and they seem to have increased success in that market. And it seems to happen quite often, but I don't really understand why. I sort of feel like markets have different personalities, and I find them difficult to trade when you get a new one because you don't really understand how that market behaves when certain things happen. Even in crypto, it seems quite different. But I also don't know what I'm doing. So,
well, crypto's quite different. Recently you got some indication that I understand, perhaps incorrectly, but I understand that the recent pullback and test of the 30,000 area for Bitcoin was caused by increased Chinese regulation of the sector, specifically in the Sichuan area. So that's a little different than many markets because you don't usually have a government in there making big waves. Of course, recently that's not proven true because we've seen increasingly the monetary authorities and such like that coming into the market with asset purchases and interest rate changes and such like that, manipulating markets. But at least in the old days, that wasn't the case. It seems much more the case now.
How do you take into account those fundamental drivers or like a shock event when they occur relative to your technical analysis?
I just got clipped by one. I thought Bitcoin was ready to break out here at the recent highs at the upper band. Looked like it was pretty well set up. And China comes in and says whatever they said, and broke things down. So you just deal with it. Setups are setups. What I do is I spend my time looking for setups where the odds of success are in my favor and where the amount I have to risk is relatively small in comparison to the reward amount. That's the definition of what I do. I should beat that one over the head a little bit. There are really only two ways you can improve your performance in the markets. You can either improve the size of your winners versus the size of your losers, or you can improve the frequency of your winners versus the frequency of your losers. If you do both, then, the results can be really stunning. But I don't think people realize how thin the margins need to be. If your winners are much larger than your losers, you can have, a failure rate of 70 or more %, right? Because the math works. And likewise, if you have a really high hit rate, say you're 65, 70, 75% winners versus 25, 30% losers, then, you can actually be consistently profitable with winners that are just a little bit bigger than your losers. So, if traders would just to stop and think about those two ideas and look at their trading record, just tabulate their results over time and look at those ideas, I think they could really improve their performance.
A lot of... Go ahead, Cobie.
If I'm hitting 99% losers and I'm holding them till liquidation, and when I get my winner,
you're not gonna make it.
I close it for a 30%. I need to change my tactics. Is that what you're saying? I need to switch something up.
So we have a little little meme around here is, why would you punish your winners? People always, they get ahead and they get into a good trade and it starts to work out and stuff like that. And, the first thing they do is they think about, well, maybe I should sell this. And, my line is, why would you punish your winners? I mean, you want to feed them, you want to nourish them, you want to, you want to bring them along. And, if you get a little bit of pullback, maybe you add to them or something like that. I think people really think about, and likewise, when they get into a loser, you say, oh, I'm going to wait until it's break even before I get back out of it. Well, that's suicide, right? That's just financial suicide. It's, punish your losers and feed your winners. I mean, come on, these are elemental ideas. And that's the difference between retail investors and professional investors.
How do you tend to...
Professional investors punish their losers and feed their winners.
How long does it typically take you to find out if a trade is a loser or a winner? And how do you define your risk when you're doing that? Sometimes
it's immediate, Sometimes you buy it and slam and it never has an uptick.
You just get filled immediately and you're terrified. Right? You're like, why did I get filled so quickly?
You top tick that one, baby.
I don't know what you're talking about. Never happened.
So there's a story they tell about the pits in Chicago. They say there's a god with a small g that runs the pits, and it has only a couple rules, but enforces them, with absolute vigor. So the first rule is you're allowed to buy the bottom tick once in your lifetime. The second rule is you're allowed to sell the top tick once in your lifetime. And of course, the corollary is that you're free to do the opposite as often as you would like.
Cobie, I hate to break it to you, but you need to retire.
I know.
He called the top of 2017 and the bottom of 2019 or whatever it was.
And 2020, the 2020 March bottom.
Yeah.
But I was thinking, actually, I just did a 4-hour drive and I got quite bored on the drive. So I was thinking about it, and in 2013, I was a noob basically, so I didn't know what I was doing. I called the exact bottom in 2015, the exact top in 2017, and then the bottoms on the way, and then this time around, I was bullish at the top. So I was like, wait, am I washed up? Is it done? Because I had a streak where the big macro moves, I was pretty good at them. I was pretty good. And this time I was like, oh, it's going to go way higher than this. We're miles away from the top. And I genuinely believed that. And maybe I was like, does that mean I'm washed up? And it brought me back to something I read a long time ago, and when I was trying to figure out trading and trying to see how stuff worked. I remember it said you don't need to sell the exact top and you don't need to buy the exact bottom. You just need to capture 80% of the move. The top 10% and the bottom 80%, the top 10% and the bottom 10%, they're just vanities. It's cool. You look cool if you sell the top. You look cool if you buy the absolute bottom. As long as you get the 80% of the move, you're good. And then I felt better and I was like, you know what? I recognized that it was like done after like the move came in. I got a good exit on the like bounces, so like I captured a good 80% of the move. I'm happy with it. It's like whatever, who cares? I'm rich.
Oh yeah. So there's a old technical bit of support for exactly what you're saying. All you really need in this business is the definition of a turn and the definition of a trend. And, so once you recognize the turn, past tense, then you participate in the trend, and then you see the turn. Again, you're too late, but if you recognize the turn, then you've captured the middle section, as you said.
I actually think 80% in crypto, where you have 20% moves in a day, is quite difficult to capture.
Yeah, I think 80% is a little optimistic, but there you go.
Yeah, I'd be very happy if I caught 80% of any particular move in crypto.
Bro, you'd be happy with 8%. I've seen your trades.
Hey, still doing all right.
Yeah, we're still all right. It's crypto. Everything's easy. So B bands. So people need to know. You've been doing this for a while. You clearly really love it. Are you just no exit strategy? You'll just do it forever, for eternity.
I guess.
Do you
no
have like
strategy?
No exit
I like
strategy.
to come to work. I've been thinking about this recently. My daughter came to work with me 3 years ago, and I've been training her and such. So I've been forced to think about exit strategy and such. So this is, in fact, my exit strategy. I want to work half days. I want to come in, 7-ish and leave noonish. That's my exit strategy.
I think that's quite nice. And so your daughter is like a trader, works with you and works at the firm.
Yeah.
All right, so we're gonna refer to your daughter as she bands instead of B bands. We've got B bands and she bands. She bands is taken over, and you can just like roll in, and you can be like, she bands, how are we looking? And she'll be like, you're quantitative. She'll have everything prepared, and you'll be like, that looks like a turn, and she's gonna be like, no, Dad, that's not a turn. Don't worry about it. And you'll be like, trust me, that's a turn. And then you're good. Then you can go home, and that's why they pay you the big bucks.
Yeah, like that.
I have a question. Cobie hinted at this earlier about like watching charts all day. Do you have time frames that you prefer? Like, do you think you could just look at, so for instance, like a weekly chart and get essentially the demand areas that you want to identify and find like, well, these are the levels that are important for the week, and look at it here or there? Or do you believe in like following the tape every day and kind of watching the asset move around and like keeping a really tight eye on it?
I don't actually want to stare at the screen all day.
I've been doing it wrong.
I like to stare at it from time to time when it's important to stare at it, but I don't want to stare at it all the time. So maybe this is a good time to introduce a concept that I've taught in some of the seminars I used to do, and that is time frame analysis. So I think everybody ought to have 3 time frames: short, intermediate, and long. And what those time frames are for you is going to be different than those time frames are for me. But you need to have 3 time frames because you have to organize your work in relation to those time frames. So short term is only for trade execution. That's all you do. You generate your ideas in the intermediate term time frame, whether your buys and sells and your stops and all the trading logic. That all belongs to the intermediate time frame. And the long-term time frame is the background information. Are we in a bull market? Are we in a bear market? Is monetary policy accommodative? Are the authorities going to be angry about this or what have you? So if you organize your work like that, you end up avoiding a lot of mistakes that people make. One of the most common ones is to make a decision in the intermediate term time frame with the tools that you're used to using and the displays that you're used to using, then switch to the short-term time frame to execute that, get the best execution you can, and then forget to switch back to the intermediate term to monitor that trade, and instead stay stuck watching tick, 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 and get shaken out of the trade because you don't have any rational framework to use to analyze the trade in that short-term time frame. So, and for me, those time frames, the intermediate term time frames, are primarily daily. My long-term time frames are weeklies, and my short-term time frames are usually hourlies. But there's a lot of variation down there. You know, I can go from looking at tick charts to looking at, you know, in crypto, I've done a lot of experimenting with 4 and 6 hour charts.
Mm-hmm. I remember you talking at some point about how crypto was the first time, like the first market where you saw people really paying significant attention to the 4 hour chart, if I remember correctly.
Yeah. You know, it's a function of you know, the major venues in which crypto is done, generally Asia and then Europe and then the US and such like that. So I think, you know, finding an optimal display that captures the activity in each of those sectors somewhat separately. Of course, there's no, you know, real separation, but
so I'd love to ask you about that high time frame with the weekly, and especially with Bitcoin. And I've talked to Cobie some about this. I know him and I don't always agree about like moving averages and stuff, but the 20 week, which is the midline for your Bollinger Bands, is that a significant part of your tool set for analyzing long-term Bitcoin trends, or what components of the Bollinger Band system do you use on that high time frame?
So well, maybe do a little bit of gear shift here. Bollinger Bands define whether prices are high or low on a relative basis. That's what they do. Right.
That's your pinned tweet. I meant to ask you that earlier. It's your pinned tweet. I can read it for you because this is what you're about to lecture me with. Bollinger Bands define high and low on a relative basis. By definition, prices are high at the upper band and low at the lower band.
Yeah. So that's true not only for Bollinger Bands, but for all trading bands. I mean, that's what trading bands do. And I got introduced to trading bands very early in my career and fell in love with them and have used them ever. So once you know where the prices are high or low on a relative basis, you can make decisions based on that information. For example, a classic W bottom is, you know, where prices come down and they make a low outside the lower Bollinger Bands and then make a secondary low inside the lower Bollinger Bands. So even though the secondary low is in fact a new low as it was today in Bitcoin, you have a W bottom that is not a new low in relation to the Bollinger Bands. So it's an opportunity. You sit there and, you know, you place your stop somewhere underneath the low and take along and see how it works out for you. See, again, we get back to that idea I talked about before. You know, you just want to find places where the odds of success are in your favor. W is a pretty reliable pattern, breaks every once in a while, but on par, W's work really well. So you want to find a place where the odds are in your favor, and the amount risked, a new low basically, is less than the potential gain. Somebody posted a chart earlier on today on Twitter. They used little W's and they boxed them, and they used a little projection from the size of the box up to do a projected target. You know, again, you were talking about innovation before. There's beautiful little bit of innovation. You know, looking at something like that in relation to the bands. So, you know, that basically my practice is it's very much like that.
Have you got some secret new tools that you've developed? Because you were saying all this stuff like I was on the internet you're supposed to share, and I know you do your free charts, and I know you gave Bollinger Bands out for free. But is there like a Bollinger Bands like V6? Yeah, but maybe I'm just checking. I'm just checking. It's my job. Well, it's not. I don't really have a job. But is there like a Bollinger Bands V2 or V3 that you're keeping in secret, and you're like out trading everybody, and they're like just like godlike? Or would you put it out straight away if you came up with something new?
I haven't kept them in secret. There, I did them some years ago, and they received relatively little traction. I don't know why. One of them was the idea of, people like exponential moving averages instead of simple moving averages, because they don't like the drop off when big change moves out of the back window of the average, affecting the front window of the average. So they like to use exponential moving averages instead. So I figured out how to calculate Bollinger Bands using exponential moving averages, because if you're going to do the exponential moving average for the midline, then you have to do that for the volatility calculation that determines the bandwidth as well. So I created exponential Bollinger Bands and published those. And then for things exactly like Bitcoin and the other cryptocurrencies, I'm actually a pretty active Litecoin trader. I was really disturbed by the concept of the open and the closed. They just don't really exist in the crypto arena. They're null concepts. So how can you create analytical tools based on closing prices? It just didn't make a lot of sense to me. So I created a version of Bollinger Bands we call Bollinger envelopes that use the highs to calculate the upper band and the lows to calculate the lower band. And then because there was no middle band to start with, because we had no closes, so no moving average, we implied the middle band as the midpoint between the upper band and the lower band. So yeah, I've been plugging away, and I release almost everything I do.
All right, so I got to check these out.
Yeah, we got to
I'm like the original open source guy. I was like there long before, open source was the thing. Long before the MIT license or.
I think that's one of the things I really like about what you've done over the years, is because so much of your stuff is, well, I guess all of your stuff is available and for free and out in the open. And so many traders, you'll hear them say stuff like, well, I'm not going to release stuff as long as it gives me an edge. What made you choose to release tools that perhaps you could have used yourself? And do you think you would have maintained more edge had you kept it to yourself? So
it goes back to when I started. I started full time in the markets in 1980. Back then it was really hard to learn. So traders, a few little traders would get together and exchange ideas, and they would help one another, right? It was a little bit, and so it came from that sort of idea, and it just appealed to me. I can't, I don't actually know how to say it, but it's my way of giving back. The markets have been very kind to me. I've had a very long run, a very good run. I've had my hard times as well as my happy times, but on par, the markets and the communities that surround the markets, the community of traders and market makers and professionals, have been very good to me. And I'm pleased to be able to give back.
That's super nice, but I need to know what it was like when where did you meet these, because now my trader groups are in Telegram or in Discord, and people just message each other a little chat. Were you in the bar? Did you have were you in an office? How did this go down?
So a couple of ways. In the old days, the brokerage firms had what they call boardrooms. And it was just a room, an empty room with a bunch of chairs in it, and on the front wall would be an old Translux ticker display where the prices of stocks, printed and moved across the display, and there would be maybe a couple screens with some stock prices and such like that, and so you could meet people in those boardrooms. And then once you met a couple people, they would introduce you to other people and such like that. So that was a primary way of doing that. The other thing was professional associations were another way that you could meet people. I did my CFA in 84, 5, and 6. And so I met a number of people in the study groups and such like that, people who were working on their CFA. I joined the MTA, the Market Technicians Association, and I met a number of people through that. But the best part of it is when I worked at FNN, the Financial News Network, from 84 to 90, my desk was in the hallway.
So you met everybody.
FNN had no money whatsoever. And so myself and 3 other people had desks in a hallway right outside of what had been the vault of we were in the old North American aircraft photo plant. That's where the FNN's offices were. And they had this big vault where they used to store the top secret stuff. So our desks were out in this area in front, and it was the main corridor through the company. So everybody that came to visit FNN had to walk by my desk. Right? And so I would just snag them, the most famous guys and all this stuff, they'd come through, and I just snag them and chat them up and talk to them. So that was really a neat thing. And as FNN in those days, the people who ran FNN were only interested in television. They wanted to create good television. So from the analytical perspective, the market people that were there, it was unsupervised play. You could do whatever you want, right? Because nobody understood what it was you were doing. And furthermore, they didn't even understand what you were talking about when you were on air. Right? All they cared was that you made good television. The way they judged good television was that, you got good ratings, and FNN always got great ratings because we were a little gem in a sea of darkness. We were a beacon in a sea of darkness. And so we always had fantastic ratings. People all over the country were addicted to FNN.
Wow, we've got to find some of these episodes, Ledger. We've got to get some of them somehow.
For sure.
I need to see it. I need to ask you: have you met people who you thought, you're just not cut out for this? You're just not supposed to be a trader. Like, you just don't have it. You can't learn it. Like, you're rubbish at this type people.
It's over.
Yeah.
Did you have to work with them? Did you have to did you just tell them bro, you can't do it?
You really can't, because they're going to do it anyway. And so all you can do is try to help them a little bit, try to keep them, out of trouble, talk to them about, taking really small losses and letting winners run, and talking about trying to find, good setups and such like that. Talk to them a little bit about discipline and stuff. That's all you can do. You can.
What are the characteristics that tend to define traders that you just think can't make it? Is it trade discipline and trade
lack
management?
lack of discipline, and lack of discipline?
Yeah, that sounds like me. That does sound like about my problem.
So there was a very famous guy in our business. He ran a company called AIQ. It's another company that's gone, Artificial Intelligence Quotient. He was a math professor at a college here in LA, and he was a mad trader, and he all this. And his wife was also a trader, and his wife was by far and away a better trader than he was. And she would constantly go around behind him and swat his losers. Right? So it was a perfect. I think it was actually a lot of people trade in teams, sometimes two or sometimes more. And I think that's one of the really useful things that teams can do is help by saying, that's really a terrible trade. Get rid of that.
Yeah, look, I try and do that with Ledger, but he don't listen to me. He never takes any of my advice, and he holds his losers down to zero. Even when he hits a winner, he holds it all the way back down to zero. Don't you? How's that me bit doing?
I've been doing better now that my daughter's here, and I'm teaching her all the time, because she asks me all these questions, all these pointed questions. Why are you doing that, Dad? I don't know. I feel like it. That's not a very good reason. Why are you doing that, Dad?
I found myself being more disciplined as a trader when I merged my kids' portfolios with my own because I had better discipline.
Wait, because they were doing better than you.
I was making the decisions on both portfolios, but I realized that my risk management was significantly better when I was managing my kids' portfolio. I was willing to take more risks personally, is the excuse that I would give myself for poor discipline. And so
this is the whole rap about OPM, other people's money. You know, and it has good things, it has bad things. Some people are more disciplined when they're working with other people's money. Some people, as we know from the headlines, go mad when they're working with other people's money, take risks that they never would take, and so on and so forth. That's, if you're going to do it, if you're going to work with other people's money, if you're going to be a fiduciary and bear the responsibility, you better do some soul searching.
Yeah. What I found was that I just took smarter risks. It's not that I'm risk free, of course, with my kids. You can't make a trade if you don't make any risk whatsoever. But the way I managed my risks were more responsible when I know that, like, this is the money that we've set aside for our children, and for the future. Like, you don't ride the bag to zero in that case. You are a little smarter with it. So that was beneficial for my.
So you don't sell 100 XYZ puts and hedge them with
Yeah, you don't go all in on some long premium option, that's for sure. Yeah. I've seen a lot of people blow themselves up after like a great run, especially options traders tend to like go really hot and then lose it all by getting hyper convicted on trades where it can truly go to zero when you're.
Yeah, I saw in my early days when I was apprenticing with that guy, a guy came in. He actually had a really interesting system. I use elements of it to this day. He kept it on a yellow pad. He was trading bond futures, and he'd run up $600,000, which, back in 1982 was a lot of money. And and he had done it brilliantly. He'd added on pullbacks and trimmed off on rallies. He managed stuff, and he had this little system that he would write down each day the date, the open, the high, the low, the close, and the settle price, and some volume, a couple other little bits of data, and he would compare the day's data using this old technique of that came from a guy by the name of Wheeler, of circled highs and lows, where you circle a high if it's higher than the high from the day before or the day after. You circle a low if it's a low from the day before, the day after. He had this little system worked out with it so he could judge overbought and oversold. And he'd done an absolutely brilliant job, and I thought he was the most phenomenal trader I'd ever met. And 3 months later, he was broke. He got to the point where he thought his own poo didn't stink.
Yeah, it does seem to happen quite often. Like a lot of the, I think there's only like 5 to 10 traders that I've seen from the last 10 years of crypto that have done well, like trading really consistently without having a massive blowout period. I've known people go on 1 to 2 year like hot streaks and like they're the best trader ever, they become the richest person in the world, and then 6 months or 1 year later they're just like no liquidity, like blown the whole thing up, got overconfident, like stuck to a system that stopped working when the market conditions changed or something. It must happen. It must happen quite often.
Yeah, just does. It's people. There's a couple of things. It's a privilege to be in this business, and you really don't want to abuse that privilege. You want to maintain some level of discipline so you can come back and trade tomorrow. It's basic idea. I guess people just forget this. They take these huge outsized risks, and it's just the risk reward payoff on those sorts of trades is just terrible.
Yeah. You spoke a little bit about, controlling your emotions or stripping your emotions from trading. I'd love to know a little bit about how you do that in practice, and especially if you've had a period of a few losers in a row and you've started to get a bit tilted and you've started to be get too in your head about things and your emotions come up to the surface a little bit more, maybe.
So the easiest way to assess that is if you know a little bit of math. It doesn't have to be a lot of math, but if you know just a little bit of math, and if you can tell whether something has changed. So let me step back for a moment and answer a question you guys haven't asked, and that is, why do Bollinger Bands work 40 years later after they were created? And the reason is because they are built on a first principle of the market. And so they're not a description of the market. They're derived from a core principle of the market. And all markets have that same core principle, and that's price change. Right? So, the second piece of that is that they're not a system. So, you don't automatically sell when you touch the upper band, and you don't automatically buy when you touch the lower band. You have to bring more to the party. So everybody uses them in a different manner. So it's a simple system, even if it touches first principles, can get arbitraged away because too many people use it, and they alter the state of the market. But because Bollinger Bands are used in such a varied manner, that's not the case. So, with that in mind, if you're running a system and an approach, a trading approach, if you compare your current stats to past stats, both for your trading results and for the price structure in the market, if those things are still really constant, then you can be confident to go forward. So, and it doesn't take very much math at all. I mean, we're just talking about a few little sums and differences and such like that. You just want to be aware as to whether there's a fundamental change that's overhauled you. And if there is, then you want to get out of the way. You want to stop using that approach, that system. Maybe you want to stop trading altogether until you understand what changes have come into the market. Maybe the advent of a more active China here or something like that for the crypto markets. Maybe that they're going to change the character of the market. I don't have any idea. That's not a forecast. It's just a question. But it's a question I'm holding in the back of my head. And my system so far seems to be going along okay. So I don't think it's a problem yet. But there you go. Was that responsive? Did I answer your question?
Yeah, that makes a lot of sense. So you're basically saying you keep a little tally on your performance and how you're doing to give yourself a reality check about, are you getting overconfident when actually you shouldn't be because your system's not doing so well.
Yeah. So here's one way you could monitor that. So if you're tallying your trades, if you're running the average size of your winners and the average size of your losers, and that's been constant for a long time, and even though you're getting into trouble, some underperformance and some stuff, if your numbers still follow those trends, then it's just a temporary problem. But if those numbers start to change dramatically, then you know something underlying is changing, and you better pay attention.
Yeah, that makes a lot of sense. And then for keeping your emotions out of things, you just bring everything back down to like the facts and the charts. Like, how do you keep your emotions at bay when you're, when you're trading? When you have hit a couple more losers?
It's even for me, who's been at this all the time and spent years thinking about trying to do this. It's just hard. We had. Last year, in one program we run, we had an incredibly hot streak, and it's really, really hard not to be euphoric, because it's working really well. It's everything you want. Yeah, it's just like
I remember actually.
Wow. So, but you just have to lean against it because it's going to change. It's these things come in cycles. Return series are not straight lines.
Yeah. That makes a lot of sense. This actually reminds me, in January of this year, I tweeted, my positions are so green, I think I can solve climate change. and you DM'd me and you said, you are euphoric. You should cut some of those positions now. And it brought me back down to reality, and I was like, holy shit, like John Bollinger like the GOAT just called me out for being euphoric. And I took a look at my positions. I took a look at the like chart, which was parabolic. Bitcoin had just hit like 40 or something for the first time in January, and I sold a bunch of my options and closed a couple like leverage positions. And then afterwards it like completely nuked to 28, and I was like, B-Bands is trading for me. He saved my life.
So the only reason I did that is because I was in the same circumstance. And I recognized it in myself. And when I saw your tweet, I said, oh, yeah, right.
Well, there we go. Thank you very much. Saved me a lot of money.
Saved by B-Bands. I love it.
Saved by the bands. Saved by the bands. But yeah, thank you very much for that DM. And I recognize that feeling, because sometimes I want to reuse the tweet because I thought it was a good tweet, and I'm like, I can't tweet that again. I've just got to close my positions. John will kill me. All right. So, your daughter, does she trade equity markets as well? Does she have favorites? Is she into crypto more, into the same stuff you are? Is she into dog coins and dog money?
No. She had a separate career before she came here, international business development, actually. And she had a passion for the ESG world when she came. So I worked with her, and we built what we call our impact program, which is a program that combines stock selection based on, or let's put it this way, creates a universe of stocks based on having positive ESG characteristics, environmental, social, governance. We call it the impact portfolio. I took a classic relative strength approach and fit it to the characteristics of those stocks, and we put it together as a program. It's done very well. So that's one of her primary responsibilities here, is maintaining that universe and working on that portfolio. And it was really a perfect way, because it was a new approach that we built from the ground up that suited her interests and such like that. So it was really really a perfect way to open the door and let her in.
Yeah, it's really cool.
And is it like Ledger, like, he was learning TA from his dad when, I don't know how old you were, Ledger. I'm going to pretend you were like, I'm going to pretend you were 4.
Okay, 4.
You were 4. Was it like that with you and your daughter, or was it like later on? Like when did you pass the knowledge onwards?
Nope, she had no interest in the markets until she decided to come work here.
Oh wow! So like not like relatively recently.
Second career.
No. She studied international service at the university and went into a career in international business development. So she was in an entirely different area. She felt it was time for a change, and she looked over and saw what we were doing and saw our relationships with our clients and how things were working and such like that. Thought it looked like thought it looked really attractive and decided to give it a try. So, and it's worked out really well. I'm very, very happy about that.
Oh, that's super cool. That's super cool. Have there been moments where you've been like, "Oh, daughter, you have so much to learn"?
No. What there are is moments when I go, "Oh, John, you've got so much to learn," because that's the name of this game. You have to keep learning. You know, yesterday it doesn't ever end. You just have to keep on. You have to keep on innovating and developing and changing. You can't bring yesterday's knowledge and yesterday's tools and techniques and yesterday's approaches to today. If you stay in one place, frigid, frozen in the spot, then the market's going to overhaul you. So you have to learn to adapt to the changing environments that we see. So.
Yeah, I think that's sort of like constant curiosity and perpetual education and perpetual learning. I think it's
exactly so.
Yeah, it's like a sign of successful people, no matter the field. And I think a lot of people often become sort of like a big hit, especially in trading. Like they do something, they have a big trade, a famous trade or something, and then they stick to their system and don't really learn new things and end up being a bit washed up afterwards. Hopefully
so there's two things about having that big famous trade. A, it anchors you to what you did, and B, it makes you think that you're doesn't smell. And so that's actually really the best thing that can happen to a trader is that the first trade is a disaster, and the worst thing that can happen is that the first trade is a huge success.
Yeah, then you end up like cryptopathic. So I'd love to ask some questions about the famous traders, and I guess one that's topical at the moment is Michael Burry. Became famous because he used his real name in The Big Short film and shorted the housing market and created credit default swaps or whatever. And these days just post tweets like it's the end of the world, everything's going to zero, everything's a scam, and everything's going to collapse soon. How do you see the position of people like Burry and the doomers or other traders like him that have hit like a massive famous winner, and now they're still doing it, but have had middling results since?
Well, they stopped clocks, and stop clocks are right, every so often, but you can't. That's not a path to success. Yes, occasionally, one of these stop clocks is going to have a fantastic result, and you're gonna learn about it. It's probably that pessimistic mindset that allowed him to correctly perceive the problems in the CMO market and take those positions to have that fantastic success that he had. But I don't think that sort of perma-bear, as we call them, or doomers or gloomers or stuff like that. I think it's really, really hard for people like that to make their way forward in the market. There are many professional short sellers. Some of them manage to make money, but many of them end up blowing up.
Yeah.
Mm-hmm.
So that that sort of ultra doom and gloom, I just turn them off. I shouldn't, because I need the input. I need to know. So here comes another one from me. If you're bullish, you want to read the bears. And if you're bearish, you want to read the bulls. You want to read the literature of the opposition. You don't want to read stuff that reinforces the opinion that you already have. right? We get this all the time. Here in the States, the conservatives watch Fox and the liberals watch MSNBC. It should be the opposite, right? The conservatives should all be over there watching MSNBC and finding out what's going on with the opposition, and all the liberals should be over there watching Fox and seeing what's going on over there. Otherwise, they just end up in self-reinforcing cycles where continually, and they have no outside input, so they have no idea whether they're right or wrong, or whether their opinions and beliefs need to be corrected to better reflect reality, because they have no framework.
Yeah, I think that getting out of your echo chamber and stripping out that constant confirmation bias from the people you follow is a good call. Thankfully, in crypto, Jim Talbot and Insilico's tweets quite funny, so you can read bearish angle and be entertained as well, without just being depressed, because some of the doomers, it's just all doom and gloom, and you're like, oh. I'm happy to read bear propaganda, but don't make it miserable. Don't make it like market's down, looks like World War IV's on the way or something.
There's a guy in the legacy market, his name's Sven Hendricks, I think, that I feel like his entire career, he just draws these gigantic rising wedges and the VIX going constantly down. He's like, one day this will break down. Like the stock market will die. Yeah. And it's like, it just keeps going. And then he'll be right for 2 weeks and be like, I called it.
Always stop Fox.
Yeah.
I remember when I was looking to buy a house 8 years ago, maybe. I don't know, maybe not that long ago actually. But I was looking to buy my first house, and I found this blog of this guy who had been on the sidelines of the housing market for 25 years because he thought that there was a correction coming. And he originally started writing this blog being like, well, I'm going to wait 2 years to buy a house because I think there's going to be a correction coming. And then he just sat out for 25 years, and now the blog just about not owning houses as a way of life. It's like, what have I found?
Yeah. There's been a couple of very famous ones like that in the U.S. stock market, over the years. I'll spare you the names.
Somebody in somebody in the chat said Sven has called 49 of the last 3 recessions. Which I'm not meaning to fade someone if they're making a call. It's just like, if you're constantly calling it and constantly wrong and trying to have this macro framework, it's really hard. It's really hard to be like the market savant of when it's going to make the change. John, I imagine part of your success is just been trying to pay attention to the chart that's in front of you. How do you build in your macro bias alongside that technical component when you're making the trade?
Usually, if we're biased toward the long side, which we have been for a while now, still are, then we look for pullbacks in strong stocks. If we're starting to see deterioration and stuff like that, then we pay much more attention to stocks that are putting in tops and worry about that. We use the macro work sort of as a filter to tell us where we can best devote our attention.
I like that. Cobie, what else do you have? We've been asking some of the questions from the chat, but...
Yeah, I was just reading something from a chat. Someone said, Cobie said it best, on a long enough timeline, I'm right, which I've never said, but I really like it, and I will tweet that later and pretend that I wrote it.
So there's a really interesting thing right along those lines. There was this movie recently, Rush, about Formula One racing, about the James Hunt versus Niki Lauda thing, and that's sort of a classic thing. It's it refers to a problem that gamblers often have. James Hunt was a brilliant driver, but Niki Lauda said to him, over time, I'm going to beat you, because I'm a consistent driver and I'm never going to take outsized risks and such like that. But Hunt was such a superb driver that he could take all those outside risks and get away with it. So, as you look around in life, there are many examples like that you can look to for guidance in terms of understanding how to trade and how to be successful in our business.
Like
also, got to shout out Danny, who was the executive producer of that movie, who watches the show, who's going to be thrilled that you just talked about her movie on Up Only TV. I'm sure this is a big moment for you. Shout out, Danny.
It's okay. I just rewatched it 4 nights ago. So there you go.
Awesome.
I watched it when it came out, and I just caught back up with it. Yeah.
It is a very well made movie. Is there any good movies, TV show, like good content on trading that you found over the years? Like The Big Short was obviously a huge hit. People really liked it. Has there been others over the years that you've watched and be like, this is I feel like I'm in this movie, or just all trash?
Nope.
Nothing.
No, I think Hollywood's done a terrible job.
Here's a variant of that question. Who's your favorite TV personality these days? Like someone visually talking about markets that you have some respect for.
I know you're not going to believe this, but I don't watch TV.
There you go.
I believe that. I believe that. Yeah. I thought it was going to be something really unbelievable for a moment. I was like, "Oh God!"
No.
So the
I just don't watch it.
The chat did ask about books. If you don't watch TV, are you a reader? First of all, there's a great chance for us to.
Am I a reader? Are you?
You got stacked with books. We should show your book first. We'll link it in the show notes, but it's also on BollingerBands.com, the Bollinger Band book, comprehensive guide to using Bollinger Bands from the man who created them. That said, what other books have influenced you?
I love the classics. The markets are the same today as they were 100 years ago. So, the classic authors really got down to the core issues and such like that. So I love the works of Wyckoff, Richard D. Wyckoff, Gartley, all of the early masters of relative strength. The pioneering work came from 1968 by Robert Levy. So many great books on technical analysis. I like it's actually interesting. I like the early editions. Many of these books have been published in series where you get the first edition and then 5 or 6 more editions. Each one gets fatter and, from my perspective, less clearer. So I like the earlier editions of some of the books. Humphrey Neal. We talked a lot about contrary opinion today, about emotions and such like that. If you want to read a master on that, it's Humphrey Neal. Like I said, I've got thousands of books.
I'm just going to trust that Luke and the CMS intern have written these down so that we can put them in the show notes.
So on my website, actually, there's a reading list.
There you go, Luke.
Look, I've learned during this episode that your website is a fruitful resource that is untapped to me, and I'm going to go explore it later because you've got reading lists up there, you've got charts updated every week. Who else? What else is going to be in there? Who knows? I'm going to go fully explore this later, and if you're listening or watching this, I suggest that you do it as well. Unless like Zid Beans from the chat just said that he can't read, in which case. I'm not sure what to tell you. I don't know how you managed to write that either, but there we go.
That's sort of unfortunate, huh?
Yeah, I mean, he managed to write in the Twitch chat, so I think he might just be joking, but let's find out later. Another character I'd love to ask you about is Michael Saylor, who, has got into Bitcoin himself a while ago and has moved MicroStrategy into Bitcoin and was the first sort of big institution making institutional buys, I guess. Became the inspiration for Tesla to buy, and has just been selling debt, selling equity, selling whatever he can to keep MicroStrategy buying Bitcoins. I think he owns over 100,000 Bitcoins now or something. who knows? What do you think to strategies like this, and the game he's playing, I guess?
People who have long-term vision, I would assume that he is in fact a person who has long-term vision. People have long-term vision and execute that program over the years with consistency. I have great admiration for. I don't know the details of his actual transactions or his actual record, but recognizing an emerging market and making a commitment to it and staying with that commitment over time. I think those are, incredibly laudable ideas. And I think it's very, very hard to do. More power to him.
We don't need more power to Saylor. He'll become too powerful. He'll become super powerful. The super cycle will be forced into existence with Saylor alone. And then the very first episode, or one of the first episodes we had on this, there was the concept of the super cycle spoken about. So, Bitcoin's grown in these multi-year boom and bust cycles where, it goes up for a year or two and down for however long. And Suzu, who's the chief investment officer at 3 Arrows Capital, which is a once small, now big crypto trading firm, said he believed in this concept of a super cycle where you can't just grow in boom bust cycles forever. At some point, that asset has to make it or fail. And he imagined a fractal more similar to the Amazon chart from now on, where you don't get extended bear markets anymore. You don't get, 3-4 year bears. Instead, you just get shorter dips on an up only bull market. Basically, is this hopium? Has Sue dumped on us and scammed us? Is this something we can believe in? What are your thoughts on the super cycle?
We have going the other way. We have a saying which has always stuck with me since I first heard it many, many years ago. And that's, we may be going to Gehenna, but we're going to trade our way there. We may be going to the moon. The super cycle may carry us to the moon, but I'll be trading my way there.
I like that so much.
Yeah, I think that's how Gainesy does it as well. Gainesy's like, you know what, if we're going up, I'll make the decision along the way. I'll judge it at a turn. I don't like that so much because it sounds like loads of work, and I'm not as disciplined as I think you are, Mr. Bollinger.
I don't know how disciplined I am, but I do try.
It requires sobriety and stuff, doesn't it? I'm not so good at those things.
Speaking of sobriety, I can't let you get out of here though without talking about your favorite beers. I know you're a fan of craft brews in particular, if I recall correctly. What are your favorite beers, favorite breweries?
So I think my favorite brewery is one that I found many, many years ago. That was a pioneering craft brewer. It's called Sierra Nevada. Up in Chico, California. They do just a superb job. As they say, family owned and argued over. Here in the South Bay, we'll have many fine brewers. We have Smog City, Absolution, Hop Saint. There's just a ton of them. What I really like about the craft brewing business is its constant innovation. They're constantly, changing and creating new products and trying new things out, and seeing what people like and what people don't like. It's just a very vibrant, lovely scene. And after years and years and years of hogwash beer from Miller and Bud and Coors, it's such a delightful thing. And when you go to breweries, the crowds are happy, people are nice, everybody's having a good time. The vibe is really cool. I just love the scene.
That's great.
What can I say? Craft beer.
Cobie, should we do alpha?
Yeah, let's do it. But I've got to pitch. I've got to make a pitch first. Look, we've got Bollinger Bands. How about we go into business together to make Bollinger beers? We might get into trouble with the other Bollinger champagne, but look, we're bigger than them. It's not going to matter. So we can have B bands and B beers. What?
Cobie,
you trying to get in on this too?
No,
you trying to get on this too? Like, sorry,
what
sorry.
do
you're
we
out.
bring to the table in that scenario? It's all this stuff.
I just came up with the idea, and I came up with the idea of B beers. It's like B bands, B beers.
Yeah.
Look, why are you trying to get me out of the deal, Ledger? You're supposed to be you're supposed to be my partner. I was trying to get you in.
So I got to cut you out too.
Might have been that I thought about this already.
Oh, look at that. Look at that.
Well, let me know when I can buy some B beers then.
Could you serve your beers in cup only?
No, I'm not going to do it, but I definitely have thought about it.
You can sell just 2,000 beers as a limited edition run of NFTs. I promise you they'll sell out, and no one will ever even drink the beer. They'll just keep it forever.
There you go.
All right, let's do it. Ledger, we've been streaming for almost 2 hours. So at the end of every episode, we ask all our guests the same question, and it is for a piece of wisdom, a teaching, or something that you always reflect on, you find yourself reflecting on often throughout your life. That you keep coming back to, you found useful, or you found solace in, or you found comfort in, I guess. Something that you can pass on to our viewers who have watched you for the last 2 hours, watched this interview for the last 2 hours, and they're looking for something that will make them happier, healthier, richer, more fulfilled. Just a piece of wisdom, a teaching that they can go, you know what, once I was listening to this podcast with this British guy and this guy from Alabama, and the creator of B Bands was on there, and at the end of the episode he said this thing, and I actually keep thinking about it, and that's made my relationship with my wife or my husband so much better just because of what B Band said, or I used that technique and I got that promotion at work or something like that.
I think that I would say to widen your experience as much as is possible, to encompass a great range, to read very widely, to have hobbies, do things that you might not do of your own volition, have new and interesting experiences, get out there and live life as widely and as broadly as you can. I think that that's really the key. I think that, people who get stuck in a rut and, a very narrow rut, miss out on a lot of what life has to offer. And that there's an ancillary benefit to do it, because after you do it for a while, you have this incredible pile of knowledge, this incredible breadth of knowledge that when you go to solve any specific problem, you have all these other pieces and parts that you can pull on to get that done. So I would say range is the best advice.
The
there you go, Ledger.
Of life.
Variety is the spice of life.
Yeah, that works.
Mr. John Bollinger, thank you so very much. It has been an absolute pleasure to have you with us today. You are a legend. Everybody in the land of crypto loves you. Thank you so much. Go to uponly.tv to check out this episode. Check out John Bollinger. Follow him at bbands on Twitter. Go to uponly.tv/Blockfolio to make your first trade on Blockfolio today if you have not already done it. Thanks so much for being here with us today. We'll catch you next time. Bye-bye.
Thanks, John. Love you, John.
Thank you, guys. Take care.